How's it going, everybody? I'm the BTC Reaper. I've been trading for 5 years and I've had a few great mentors that have taken me from a trading noob to a profitable trader. Are you sick of plotting lines on the chart to map your support and resistance? Well, in today's video we're going to be covering the Fibonacci Retracement tool, where you can map multiple support and resistance areas in a couple of clicks. And if you stay till the end of the video, I'll even show you an additional zone that's not on there by default that'll help you get some trades in some volatile areas. If you're unsure what support and resistance are, please check out our video before this and then come back to this video. Depending on how you draw your Fibonacci retracements, they can come up differently on the chart. So when we're drawing those, we'll draw a couple of different ones, just so you can see the differences depending on how we draw our retracement. So if you look here, I have a horizontal line drawn, and this is just an area where we have had some different supports and resistances over the last couple years of Bitcoin's trading, so it's a fairly solid point. It would take quite a bit to take us under this area just because of the number of candles we have had closing on this in this area and how many times we have bounced off of it. It's a pretty strong support area. If we were to break it, like I said, we'd have to have some sort of economic issue like what we've got going on get worse. So if you go down to the third tool here and double click, the first tool is our Fibonacci retracement. So I'm just going to start that right over here, click there, drag up, and if you see, I don't want that. So if you end up where you don't want it, you can click this little circle after hovering and drag it out a little more. And you can see that we got these couple different colored zones in here. So the way, so we zoom in. I'm going to lock this so we can't drag that around. If you zoom in, you see this level here. You kind of have to zoom out to see which level it is. This is the 0.786 level. So you can see we came down and touched it and then bounced off of it. Same with this level, we kind of did the same thing. Bounced around on it before we broke down. I'm not saying we had to break down from here. You'd had to use other technical analysis to tell you which way we're going to go. This is just showing you some supports and resistances that you could have come and made some trades on. For example, you could have seen that we came down here, bounced up, and then came down here. This pattern, if I can get my tool, that right there is a double bottom, or a W pattern. Those are typically bullish patterns that break up. So as you can see, we use this area as our support. We came down, went under, and then broke above it. We tried breaking below it again, but we came above. Currently we're holding above this area, and we're higher than we have been, so we have a new high. That would be a signal of a slight uptrend, but you'd have to use other analysis, like I said, to determine whether this uptrend is sustainable. If this uptrend were to be sustainable, we would go up to this next trend line right here in the yellow, and we would either bounce up through it or we would get rejected. Random line here, see if we can, there we go. So this area is a little bit better to show how a Fibonacci zone works as support and resistance and how you could use it to trade. So you can see we came down and bounced off this. We flipped this zone right here to our support, and we came up near our resistance, but we got rejected down. We found it as support for a little while, a couple days, but then we ultimately broke through, and now it became our resistance. So we fell through, we tried to come up to turn our resistance into support, we failed there and came back down, and we just crashed through our support level. We did manage to come back up through the support level after a couple of days and after a few knocks on it. The more candles you see touching a zone, the weaker that zone's going to become and the easier that zone is to break. Typically within a short period. If you get like 5 candles over a year, it might not be as strong as something where you have 10 or 15 candles over a couple days or months. So we came up, we've got rejected by our resistance at our next Fibonacci level and came down, made another attempt, and we came back down to our support and bounced out of the yellow zone here. And you can see we just kept trying to flip support and resistance, but ultimately we wound up breaking our support and flipping it to our resistance and coming back all the way down here. So as you can see, you get a few zones and they're pretty spread out when you do them over a long period like that. Now we'll get rid of that and we'll just go. So if we start from the top here, we can drag downwards to down here. That'll kind of give you different zones than you saw before, just because the retracement's coming from the top down instead of from downwards up. So you can see that we pretty much have similar channels. They're just a little tighter than the previous one. And you can see we fluctuated within those channels pretty similar to how we did with the last retracement. With these zones that you see up top, these could be additional zones you would see, much like, here we'll bring my other one. You get these zones much like when you go from the bottom to the top. They just flip where they show, because instead of going bottom to top, we went top to bottom, so it gave our other zones up here instead of down below. These zones are still valuable to use. So if you want to modify your Fibonacci retracement, you can double click here. If you have your object tree, you just scroll all the way down in this taskbar, click this, and this object tree will pop up. Or you can try and click on the chart. I think because I locked it, it won't let me. So the 618, it won't be gold. Turn this to gold and check a checkbox and type 0.65 and turn that to gold as well, and then hit OK. So that gave us this little golden pocket you see here, and the golden pocket is a zone that whales like to try and push price through. So let's see if we can find any examples. So you can see we came up, we had a couple of candles in here, and then we just shot right through and said goodbye for 2 weeks. And then when we came back down to test this golden pocket, we got like 2 bounces, and then we just shot right through. So when you're approaching this golden pocket zone, just be mindful that it tends to be a highly volatile zone where a lot of trading can occur really quickly and price can just shoot through one way or another. If you don't have this zone and you're hoping for a bounce off here, it may or may not play out, but this zone just kind of gives you an added caution. Thank you for watching today's video. I hope you learned a good amount of information. Please let me know what you thought down below, good or bad, and leave us a like and subscribe to our channel. Thank you and see you again.